you consume less energy, it just makes you less sophisticated, less economic growth, lower standard of living, more backward. And it's just insane, and it just makes me angry. So I don't even bother getting involved in it. I sort of feel that by buying copper to support the anti-fossil fuel narrative, I almost think that's immoral. Because, if you just look at what fossil fuels have made possible for mankind, I get that they pollute, and I get coal power stations, I get it. But the more sophisticated we get, the better at consuming energy we get.
Hello and welcome to Soar Financially, a channel where we discuss the macro to understand the micro. My name is Kai Hoffman, I'm the JR mining guy over on X, and of course your host of this channel, and I'm looking forward to welcoming back an old friend, Dominic Frisby. He's the author of the Flying Frisby, comedian, but also newsletter writer, and we had the pleasure of hosting him at the DEUTSCHE GOLDMESSE in the past, and I can't wait to catch up with him. It's been way too long. Of course, we're going to talk general economic outlook, outlook for stocks 2025, but then we're going to hone down on gold and silver and some of the mining stocks. We don't have to discuss names, but I'm really curious, where he sees sentiment headed for the mining stocks, junior explorers, and so forth. So lots to talk about. Put everything into context. Really start with the macro and then hone in on the micro. Before I switch over to my guest, you guys know the spiel. Hit that like and subscribe button. Helps us out tremendously, and we do appreciate it. Thank you so much. Now, Dominic, it's great to have you back on the program. It's good to see you.
Thanks, Kai, and thanks for having me. And lots to talk about.
Absolutely. Yeah, no, really appreciate your time. I know you're super busy writing a new book. You got deadlines to meet. So we're trying to keep this maybe to 30 minutes, really, Dominic. Let's dive right in. We have to start maybe setting the scene a little bit, start with the macro. What is your current assessment of the economy and the financial markets, Dominic? Let's start there.
Well, just the broader S&P more generally. It's the first year of a new presidency, and of the 4 years of a presidency, that's typically the weakest year. And in addition to that, there's a lot of upheaval. 1 minute Trump says this, 1 minute he says that. He likes to shake things up. I'm really bullish about the United States. I think it's going to be a sleeker, more efficient country as a result of all the reform that's taking place, but there's going to be a little bit of upheaval along the way. And in addition to that, at the time of his taking the presidency, the S&P was richly valued compared to other countries around the world. So I'm not perhaps as bullish as I was on the S&P a year or two ago, but I think we'll probably see a 5 to 10% gain over the course of the year rather than a 20% gain or something like that. I bought copper last week, and I bought my decision to buy copper was completely based on moving averages. It's a sort of fairly short-term system, but when the 50 and the 10-day slope up and you get a cross of the 10-day through the 50, that's a buy signal for me. And so I bought copper, and I'm a little bit in the money. So, buy copper, that usually means I'm bullish about base metals generally. I'm a little bit worried about what uranium has been doing. It looks a bit messy, and gold and silver are both in out and out uptrends. Coming into March, we're in a sort of weak time of year for gold and silver. We enter a sort of weak quarter, so maybe they need to come back a little bit. But the broader picture is that gold has been in a big bull market. Began in late 2022, I suppose you could say. Not long after the imposition of sanctions on Russia. And that looks like it's coming to an end now, but I don't think it changes the driving rationale between this gold bull market, which is that it's not been a retail bull market in gold and silver. Retail hasn't been buying. It's been central banks that have been buying, particularly central banks in Asia, China, along the Silk Road, countries that are looking to diversify their holdings, de-dollarize, and they have been the big buyers of gold. China's been understating its gold buying probably by a magnitude of 3 times, and it may even be that the United States itself has been buying the gold. In the lead up to this celebrated audit, and we can talk about that next if you like.
Yeah, we'll get more granular on many of the topics you just touched on, Dominic. Maybe we'll start with the 5 to 10% in the S&P 500. Where do you see that growth coming from, and why are you positive on the S&P 500 still like moving in a positive direction despite like 14, 15 years of very positive returns here?
Well, I'm just bullish on the S&P because I'm bullish on America. And, I just think it's at the beginning of a new golden age, and this stripping out of the state, this making everything more efficient. Hopefully it's going to lead to reductions in taxes. That leads more money in people's pockets. That means more money to invest. And the S&P to an American is like, a house to an Englishman. The British keep their money in their houses. The Americans keep their money in the S&P 500. And it really is the bellwether for America. So I think broadly speaking, the S&P is you can't not be bullish on America with everything that's going on. You might say that the top 7 stocks are overvalued, and they probably are. And there's all sorts of upheaval coming along with AI, and the fact that it might be possible to do some of the work with AI that's going on with much less power. I was reading about this thing IO the other day. I'm not really in a position to talk about it with any great insight, and then there's that new Chinese app that came along and was able to do what ChatGPT was doing with infinitely less computing power and less investment. So, maybe that the S&P needs to rotate a little bit. That's long overdue, and stop relying on those top 7 companies. The small caps have been underperforming for a long time. They need to take the leadership once again, and that will happen eventually. But so I'm just not, you can't not be bullish America, but maybe that bullishness needs to take another form.
Yeah, no, I agree with you. Like, we're both sitting in Europe. You're in the UK, which is apparently a little off, worse off than Germany. Although it's we're head to head on like who's the worst nation in Europe right now in terms of economic and overall performance.
Oh my God, Kai! It's a tale of two cities. You've got one side of the Atlantic, America, Argentina, stripping back the state, getting more efficient, spending money properly, and then you've got Western Europe, which just seems to be doubling down. And we voted to leave the EU, but it doesn't matter. We're still following the same trajectory of stupidity, and it's terrible what's happening here. And you wonder if it's everything that happens in America tends to happen in Europe later, but on a watered down way. But you wondered if what Elon Musk is doing, if anything like that is even possible in Europe. The high tax deep state model is so entrenched here. I mean, I'm really not bullish about Europe.
No, just you mentioned AI, for example. I don't think anything is coming out of Europe in that regard.
What's her name? Van der Leyen gave that speech. We're investing all this money in AI. It can't come from government. It has to come from the private sector. What the government needs to do is get out of the way so that the private sector can expand. But they seem intent on regulating everything, and it just makes progress impossible.
Absolutely. No, it's curious what your thoughts are. Like, very on a tangent here. OpenAI going instead of non-profit for profit. Like, do you have any thoughts on that?
Well, I've been using OpenAI ChatGPT a lot, but I'm just using Grok more and more. It's better.
Yeah. Interesting. Like, I've been starting to use it because it gives me good overview of sentiment on X, and some commentary you can put in, like Trump copper tariffs or something, and it gives you an overview of sentiment on X and maybe some direct quotes from users as well, which is really interesting.
I use it to help me with my work like mad. I use it to help me with my research, but also for things like just helping me write SEO optimized descriptions for my articles. I use it to proofread my stuff. I use it to help me write titles. I just think it's superb. I just love it.
Yeah, it's a great sparring partner. Absolutely. It's fantastic. I love it as well. We use it quite a bit here on Zora Financially. As you said, like help us generate and brainstorm title ideas and things like that. Dominic, you bought copper, and like two approaches to the copper thematic. First, of course, like did you buy copper because you also thought the economy is strong enough to push copper higher? Chinese rebound, economic rebound as well. U.S. spending more on AI infrastructure or infrastructure in general. Is there more to the copper thesis than just hitting a trend signal here?
The reason I bought was completely technical. It had nothing to do with fundamentals. If I look at the fundamentals for copper, like I would have been buying, well, I have bought years and years ago. Every time I read the fundamentals for copper, the actual supply versus the demand. You just want to run out and buy all the copper you possibly can, and for some reason those fundamentals never seem to deliver. The copper market seems to have been in, I wouldn't say in deficit, but the fundamental arguments of incoming mine supply against copper demand, whether it's from electric vehicles or Chinese infrastructure or the growth of AI, whatever it is, it's just been an absolute, you can't argue with them for years, and yet the copper price hasn't delivered on anything like those fundamentals, to the point where I don't even bother listening to the fundamentals now, because they just get in the way of they get in your head, and I just make my copper decisions based on technicals. But it's quite easy once you make a decision based on technicals to then start supplying all the fundamental decisions afterwards.
I was going to ask you, like, how easy is it to get the emotions out of investing in general? Like, Dominic, like copper, for example, we all have opinions on whether Europe, for example, will be all EV powered by 2035, for example, or the world will be carbon neutral in 2050. So it's an emotional topic. Like, how do you keep that out of it?
Just look at moving averages.
Smart. Easy to do, but very difficult in reality, in my opinion.
I've stopped reading it, Kai. I've just stopped reading the fundamentals because they're too misleading. There's just too much information. There's too many arguments. It's too politicized. I happen to think the whole EV movement, not to put too fine a term on it, I think a lot of it is bollocks. I think the more the whole electrification of everything, I get that. I drove in a Tesla the other day in America on self-driving mode. It was fantastic. But I just think fossil fuels are amazing, and they've made so many things possible. And I think this European desire to get rid of fossil fuels is just deluded. Everywhere that has high levels of wind power pays way more for its electricity than where there are low levels of wind power. And cheap energy is essential to a nation. If the most sophisticated nations on earth consume the most energy. If you consume less energy, it just makes you less sophisticated, less economic growth, lower standard of living, more backward. And it's just insane, and it just makes me angry. So I don't even bother getting involved in it. I sort of feel that by buying copper to support the anti-fossil fuel narrative, I almost think that's immoral. Because if you just look at what fossil fuels have made possible for mankind, I get that they pollute, and I get coal power stations, I get it. But the more sophisticated we get, the better at consuming energy we get. And I think it's immoral to do away with fossil fuels. It's that bad. But there's no point. I'm just a little bloke in an office in Southeast London. I can't do anything. So I just look at the moving averages, and I don't bother looking at the politics anymore because they drive me insane.
Well, you're buying copper. If everybody were to buy copper, at some point it might not be economic anymore to have that rollout, right? Just attack it from the other angle here.
Yeah, well, exactly. And if you've got a problem with fossil fuels, why are you using copper? If you just look at the amount of fossil fuels that get consumed in order to make copper in the first place, it's just, the whole thing's so hypocritical. Let's not even go there, because it just makes me cross.
I'm with you there, Dominic. I have the same concept, and that's one of the reasons I love being in the mining industry, because you look at things from the bottom up and you understand things very differently. You look very, very differently at things. One of your articles was called "Preparing for a New Economic Era." I'm not going to read the second part of the title because we'll get to that. But what does the new economic era look like for you, Dominic?
Well, I was specifically talking about gold when I wrote that, and I was talking about how gold's going to do under Trump. But, I'm just repeating what I already said, Kai. I think America, Argentina, extraordinary levels of growth. That's where the opportunity is. And Europe, stagnation, too many taxes, too many stupid midwits controlling policy, getting in the way of the creative. Anyone with half a brain, like I just say to my kids, get out of this country, go to America, go to Dubai, go to somewhere where taxes are low. My son's 24. He's in his first year out of university. He earned £12,000 last month. That's an incredible amount of money for a young man to earn. He works really hard. He leaves the house at 6:45 every morning, goes to work, comes back at 7. He has worked so hard. If I compare him to my first year out of university when I was just a bum, and he's worked so hard and he really wants to make something of himself. He earned 12 grand last month. of that 12 grand he earned, he took 5.5 grand home. 6.5 grand was taken from him. And I just think, how is that? How is, it's just terrible to do that to a young boy. And he's going, I don't even have a doctor. It's all very well going, it's taken with the NHS. He doesn't even have a doctor. And, it's just so unfair to do that on our young. They're young with income taxes and debasement of currency are just subsidizing everyone else. And particularly the productive and the hardworking, and it's immoral again.
Yeah. No, it absolutely is. Like, we don't have to go to the topic of taxes and how inefficient everything is being spent anyway. That's a whole different discussion. But on that topic, Louis C.K. actually, or Louis K.C. doesn't matter. Like one of the guys on Twitter posted the website, the Doge website actually gives you an overview of all the spending they've cut. And they have like a spending cut tracker, which is amazing to see. It's sitting around $53 billion right now, 3.25% of the total reached that they want to get. It's almost like what's the public funding thing? A GoFundMe, where you can see the progress. So it's absolutely hilarious.
It's great. And people argue with it, but I think the silent majority do not want their money wasted. You work so hard, and then it gets spent on, subsidizing art, teaching, modern art to Afghani peasants or something. And you're just like, that's not what I work for. And it's just immoral, but, and it's just wonderful what's going on, I think. And the transparency that it's bringing and the hypocrisy that it's exposing. But 50 billion in the context of America, 37 trillion debt and running deficits in the trillion, 50 billion is not that much, but long may it continue.
I was going to say, like, we're only a month and a half, maybe,
yeah.
So like progress is great. Let's see where it goes and what makes sense here.
But long may it continue, because it is a force for good. And Elon Musk is a hero.
Absolutely. Second part of your article was about gold in the age of Trump. Big topic that we need to tackle here. I've got a few questions lined up in that regard, but how do you think gold will behave?
Well, one of the things I did in the article was I looked at gold in the first era of Trump, and I know the circumstances are very different, but gold basically had an okay first year, a flat to down second year, and then it went bananas in the last 2 years and broke above $2,000 for the first time. And it's not impossible for something similar to happen now. So far, the behavior of gold has roughly been tracking what it was, although in the last couple of weeks, gold's carried on going up, whereas I think the previous time it flatlined. It sold off after Trump won the election and then rallied in January after he took power. Something similar happened last time. The consensus is Trump wants a weaker dollar. And if he does, a weaker dollar normally means higher gold prices, at least in US dollar terms. And, last time around, Trump was a bit of a printer, which again helps gold. But I don't think he is going to be that much of a printer this time around. He seems to be much more Austrian, sound money, libertarian orientated, the administration this time, than it was last time. Scott Bessent, the Treasury Secretary, he earns huge amounts of gold in his hedge fund. He's a gold bug. He understands gold. So we shall see. But I just think, particularly if you're in Europe and if you're in the UK, gold is your hedge against government. And gold preserves your wealth much better than fiat money does. And so I just advocate everyone to hold a large portion of their savings in gold. And, maybe, okay, over the next year, it might go down 5 or 10%, whatever. Over the course of a 3, 5, 10, 20-year period, it is a much better store of wealth than fiat is, even with fiat paying interest. So I just think everyone should have an allocation to gold.
Like, I've been reading Stefan Miran's work on a potential new economic system here, and he touches on gold and Bitcoin to a degree, undermining the US dollar. And the question now for you, Dominic, is gold at $3,000 a threat for the US dollar in terms of reserve currency status? It's like, I'm trying to make a balance. Like you touched on weakening the US dollar, it plays such a pivotal role. Like, is it under attack from gold right now? And why did the the establishment let run gold to almost $3,000 here?
Well, the answer to that is yes and no. And what does reserve currency status mean, and how much does it even matter? Because America's got 8,000 tons of gold marked at $42 an ounce. If that 8,000 tons is suddenly marked at $3,000 or $4,000, that suits America, because its entire foreign exchange holdings are in gold. So, it's a high gold price is not necessarily bad for America. When in 1933, when Roosevelt devalued the US dollar, it triggered the mother of all mining booms, and loads of those mining companies were in North America. So it triggered a boom, and America's gold holdings over the course of the 1930s, between 1930 and 1939, I don't quite know how much they multiplied by, but America became the biggest holder of gold in the world. And I think it reached a peak in maybe 1947 after the Second World War. So gold went to America after the US dollar devalued. So just a weaker dollar doesn't necessarily mean that America has less gold. The next thing I would say is that, people talk about the reserve currency. Well, that's because central banks around the world hold US dollars. But actually, a lot of the time, they actually hold US treasuries. And US treasuries, if you look at China, it's almost halved its holdings of US treasuries since 2013 to now. But its US dollar holdings have increased. It has more than 3 trillion US dollars. And central banks around the world are generally reducing their treasury holdings and increasing their gold holdings. In 2015, gold reached 10% of US central bank holdings around the world. It's now at 20%. And I just think it's sensible asset allocation to increase your gold holdings. The UK is the worst offender in the world. We're the one country that's increasing our treasury holdings, and we're going to overtake China in terms of US treasury holdings in the next year. But so central banks have gone from 10% to 20%. They'll probably go to 40% in the next 10 or so years. And so as a store of value, governments are holding fewer US dollars relative to what their other holdings are. But, in 1920, the US dollar was, the gold was 90% of central bank holdings. So even if it only goes to 40%, it's still nowhere near 90%. And even if their gold holdings increase, their US dollar holdings will probably increase as well. And there are nations that are, Russia, all the countries along the Silk Road, as I say, that don't want to hold US dollars or can't hold US dollars. They need to de-dollarize, they need to diversify. And so they're the ones that are doing the biggest gold buying at the moment. But they're not going to transact in gold. Like Russia bought, I can't remember, X billion dollars worth of gold from Iran, to X billion dollars worth of drones from Iran with which to use in Ukraine. And it paid for them in gold, and it threw $3 billion worth of gold from Russia to Iran. Now, that's just so impractical. It's just not that, flying gold around. It's just so impractical. It's just not going to happen. So gold's role is going to be store of wealth. It's not going to be medium of exchange. And I don't think that poses that much of a threat to the US dollar, really, in the grand scheme of things. But maybe I'm wrong.
We'll see how it all plays out. There's so many theories out there why gold is being flown into the U.S. right now, whether it's being short covering, tariff fears, which I call BS on personally. What are the other reasons?
Well, the other reason is that we know this audit of Fort Knox is going to take place, and the theory is that the gold has been flown over in anticipation of that, and it's actually America that's been buying in the last couple of months, knowing that this audit is going to happen. And both Elon Musk and Donald Trump have both been so casual about the audit of Fort Knox, they've almost made it a joke. I don't believe they would be that casual about it if the gold wasn't actually there, because it's quite significant if the gold isn't there. They're making out like they don't know, but Scott Bessent said that there was an audit in September of the Fort Knox gold, and that it is all there. Now, if there was an audit in September, and the audits take place every year, as he said, why have these not been made public? I just don't understand it. But they haven't been. So maybe they conduct internal audits, but you can't understand the reasons they gave why they haven't published. There hasn't been a public audit is they said it's too big an undertaking and it's not necessary to know. But if they've been conducting internal audits, then those reasons that they've been given are blatantly false. So there's something that doesn't add up. But Bessent did say there was an audit in September and the gold was all there. So he might have been misinformed, but I don't believe he's stupid enough to. I just don't believe that's the case. So something doesn't add up for sure. But like I say, for a long time, I've thought the gold might not be there. And I thought it was used to prop up the London gold pool in the 1960s. But I think it's only like 500 or 600 tons of gold that have come to America from London. And that has left something of a shortage in London. But there's something like 8,000 tons in London at any given moment. So 500 tons is only,
5%,
7 or 8% or something. Yeah. So it's not that much. It's meant there's something like a shortage, but it might just have gone there for in anticipation of tariffs. We don't actually know. And sometimes there just are these flows for whatever reason. Maybe people are onshoring their gold again because they like the new administration and they don't trust Europe because Europe's going, who knows? But there's something that doesn't add up. But usually the gold buggy conspiracy theory biggest dream, the gold bug dream, there isn't the gold, there's going to be a run on gold, there's a shortage of gold. For whatever reason, it never materializes. I've been following gold for over 20 years now. I'm just writing a book about gold. I love gold. I think everyone should own gold. But that extreme there's about to be a run on gold, it never materializes.
Big
maybe one day it'll do that, but I've never seen it.
That big COMEX bear squeeze. Like I spoke with Alison McLeod about it yesterday, and personally, I'm a bit nervous about the price action in gold. Too fast, in my opinion, and I've been calling it meme gold lately. And I don't mean to belittle gold at all. I'm just looking at the price action, purely price action. The run up to 3,000 was fairly fast, and my question to you now is gold overbought, overhyped, and maybe overpriced?
It's a little bit overbought. If you use things like RSI, it's at the upper end of the range. It's definitely frothy. Every pullback is getting bought, and it's not retail that's doing the buying. Most coin dealers are reporting very low transactional volumes. You can correct me if I'm wrong here, Kai, but I understand that in Germany a lot of retail is actually a net seller. They bought their gold during COVID, and now they're short of cash for whatever reason. They made a lot of money from their gold and they're net selling. Now, Germany's normally, I think, the second or third biggest retail buyer in the world. And, it's fairly good, the retail buying in the UK, but I understand the retail buying in the US is almost non-existent. And that also explains the lack of performance of juniors, because it's retail that tends to buy juniors. And if they're not buying gold, they're not buying juniors either. That might change for whatever reason. It's central banks is the only explanation. It's central banks diversifying out of dollars or just increasing their gold holdings, they're reallocating, that seem to be doing most of the buying. And I think the biggest of the lot is China. And maybe, as I say, some of it is America, shoring up their reserves in anticipation of this audit. We shall find out.
Yeah, looking forward to early March when the World Gold Council comes out with their gold report. So their monthly gold report, which is quite interesting. By the way, German demand.
But we are in March to June is normally a crap time of year, so maybe we'll get a bit of a pullback. But I can't see it being more than $200 or $300. I don't see it being much more than that.
No, I don't predict a crash. So
no. I don't think when it went from 1900 to 1100 in 2011, nothing like that.
No,
but when it went to 1900, it was it was in the Greek debt crisis, coming out of the financial crisis. It was literally the world's going back to a gold standard. There was so much bullish sentiment. Now this is a stealth bull market, and it's not one that retail are involved in. And I think for a proper secular top, we need retail. Even in COVID, when it went above 2000, there was a retail top to it. Fortunately, that top only lasted a year or two, or maybe 3 or 4. But this one, it's a stealth bull market, and that, for me, that means that while we might have a healthy pullback of a couple of $100 or $300, whatever, I think longer term this is a proper bull market. And I stress, we only might have that bull market. Every pullback since 2022 has been bought on the 50-day moving average, and maybe it goes back to the 50-day moving average again, and then carries on up. I'm short-term correction maybe, but long-term end of bull market, I don't buy that.
Yeah, no, me neither. I'm just a little nervous about the recent price action, because now everybody seems to be talking about gold being flown back to the US and maybe restocking Fort Knox and all of that.
Maybe.
So that there's that hype, right?
Every long-term top in gold has been accompanied by the miners. And this one, like any action in the miners, is just begrudging. It's like a little bit because it has to. Basically, gold and the miners, normally you'd expect the miners to trade 2 or 3 times, to do 2 or 3 times what gold does. And now they're just kind of more or less mirroring. There's nothing like the compensation you should be paid for the extra risk you're taking of owning a miner. There's none of that. And so, we're not at a top. Long term.
It started though. It's like, I don't want to correct you, but it started. Year to date, GDX up about 20%, gold up 10%. So we're at 2-1 already. We're lagging a little bit, but we're seeing signs of improvement. And,
we are seeing signs of improvement. I agree.
So we can talk about Q4
I was talking
numbers
in a longer time frame.
No, absolutely, I agree. Like that, I only know that because I looked at it just 2 days ago. So. That's why I wanted to mention that. But let's talk real quick financial performance of the miners real quick. I know you follow the big miners as well. Like, can you put some context around that for us?
Well, I don't actually follow the big miners. I just look at the little ones. But they've been terrible, and particularly things like bulk tonnage, low grade deposits. Those kind of ones that they're just given nothing. And in a proper bull market, the bulk tonnage, low grade deposits are suddenly, everyone's like, this is going to be a mine. And at the moment, the attitude is that's never going to be a mine, and it's uneconomic. So I don't know what changes people's perception, but when this bull market in juniors eventually gets going, we're going to see some of these companies multiply. They're going to be going up 5-10% every day. And some of them are going to go up 5-10 times. They are so undervalued, and they've been so crap for so long. And, all they are is just net drains of capital at the moment. And so when this bull market properly gets going, there's going to be a lot of money to be made. But at the moment we're waiting. And so when you're buying a junior mining company, you can go, well, I'm going to buy it because I know at some point it's going to go up 5 times. Well, it could go down 60% while you're waiting. So you have to try and find a mining company that is de-risked in some sort of way, so that it's not going to absolutely destroy you during the wait. And so to do that, you have to find a mining company that's got something unique and under-recognized going for it. It might be bringing a mine into production in a year's time, and without having to dilute itself. And so therefore, once it starts producing and it's actually got competent management who will get this mine producing without a hitch. I think in all my time covering mining companies, I've known about 3 mines to go into production without a hitch. Every other one has just run into one problem or another, some excuse. But let's say this mine is going to get into production, and suddenly this mining company is going to get re-rated from a development play into an actual producer. You and I both follow one example of that is a company called Minerals Exploration, which is listed in London. And it's just bought this Nicaraguan asset off Condor Gold and taken out Condor. Now, Minerals Exploration has got a proven team because they got the mine in the Philippines working against everyone's expectation, and suddenly it's spitting out so much money and they don't know what to do with all the money. So they've bought this other mine in Nicaragua. Now, everyone who knows the asset in Nicaragua, Condor's old La India asset, anyone who's seen it, they go, it's a good asset. The problem is it's in Nicaragua. And but anyway, Metals Exploration have bought it, and they're hoping to have it producing within 18 months, 2 years or something like that. If Metals Exploration gets that clearly working, and it's going to earn so much money that, what's currently a 6p stock is going to be a 15 or a 20p stock, like that, once the numbers come in. But then if miners do actually do what miners are supposed to do during a gold bull market, it's going to have all that extra addition to it as well. Another company we both look at, Minera Alamos, had 3 mines in Mexico that it was supposed to, and it was going to get another one. It was going to go from development play to mid-tier explorer, and suddenly it was going to be producing 100, maybe even 200,000 ounces of gold, and it was going to have $1 billion market cap. Well, it got its first mine producing, then there was issues with water, so that went tits up. It seemed to have got over those issues now, and it is producing well, and it was going to use the funds from that first mine to build the second mine. Well, guess what? The second mine couldn't get an exploration permit because it's Mexico, and the Mexican government aren't giving exploration permits to anything. So the whole thing just went into hold because we're waiting for this exploration permit that never came. Fair play to Minera's management. They went away and they've now acquired this other mine in Arizona, and with all the Trump drill baby drill attitude, that any permitting issues there should not be permitting issues. The same applies to another company called Fortitude that ran into permitting issues in, I think, Nevada. Well, those are going to disappear now because of the new regime. But in any case, Minera, if it gets this mine, what's it called? Sabre, the
Sabre Gold's
Copperstone project. If it gets that producing in a year or so, well, great. Suddenly it's going to get there, and then who knows? Maybe it'll suddenly get its environmental permit in Cerro Doro as well, and then suddenly the stock's going to double or triple just because it's got this permit awarded, and it's got 2 producing mines, and then it puts Cerro Doro into production, and then it uses the money to get La Fortuna, its 4th mine producing, and La Fortuna has already got most of the permits it needs, at least the environmental ones. And then suddenly in 2 or 3 years, we are looking at a 200,000 ounce producer. And so, it gets re-rated by the market anyway. But if in addition we go into a proper gold mining, junior mining bull market where perception of everything changes, then this thing, it's 30 cents at the moment, could easily be $1.50, with a change of perception and the growth. So I like those kind of companies where the weight is de-risked. But I thought that with Minera Alamos when it was at 60 cents, it halved. In fact, in December, it went to 25 cents. And another company I look at, once Moneta, now still a gold bulk grade, low tonnage deposit, had one of the cheap, it was the cheapest, the largest undeveloped gold asset in North America. It was trading at like $10 an ounce in the gold ground, whereas peers are trading at $30 to $40 an ounce in the ground. Just to get a similar recognition to its peers, you thought the stock was going to triple or quadruple. You thought a senior looking to replenish gold ounces had to buy this one. It didn't, and the stock went down. It halved. Then it went into new management, and the new management, like the new CEO, is married to the chief operating officer of Agnico Eagle. They're literally sleeping in the same bed at night. Do you think they're not going to be talking about this amazing deposit? Of course they are. So you thought, well, maybe it'll go up. The stock halved again. So I thought that one would be a de-risked weight because you were getting this gold so cheap it couldn't get any cheaper. Well, guess what? It did get cheaper. So it's just really, really hard to find when the sentiment is against you. You can stock pick to your heart's content, and it's really hard to get it right. But when this thing turns, and maybe it's turning a little bit now, and the juniors start flying, then these things will go up 5 or 10 times.
Absolutely. That's what I'm betting on. That's what my portfolio is geared towards as well, Dominic. You know that. So we've talked about that plenty of times. Dominic, maybe last question, maybe to summarize our discussion as well. I kind of like that question for that. If I were to come to you with $1 million and ask you, Dominic, help me allocate my money, how would you do it? And again, not financial advice, like it's really a hypothetical question. Sort of summarize our discussion points here.
Well, in my newsletter, The Flying Frisby, I have a thing called the Dolce Far Niente portfolio. And that is Italian for do sweet nothing. And the idea of this portfolio is that we allocate it and then you don't need to look at it. And we have a minor reallocation, maybe once every 6 months or once a year. And I haven't got it on my screen, but off the top of my head, we have something like 15 to 20% in physical gold, 5% in Bitcoin, 5% in uranium. We have an allocation to, when I say uranium, not uranium miners. I don't believe in uranium miners because most uranium mine, like of the 35 companies or however many it is in the uranium ETF, there's like 3 that are actually producing, and most of the other ones will never be producing. Not for 10 or 20 years. There's because they just won't get the necessary planning permits. And so they are net drains on capital that just go up because perception changes. So I'm not a fan of uranium miners for that reason. I just advocate owning uranium itself. Yellow Cake is the UK way of doing that. And there's a Sprott uranium ETF where you can do it as well. So I just advocate owning uranium because we need this uranium and there is going to be a shortage. At the moment, the market is telling you there isn't a shortage, but there will be. I advocate owning oil and gas companies. And even though Trump wants lower oil and gas prices, these companies are still going to make more money. I think if you wanted to speculate, it might be worth putting some money into the North Sea, because then they're going to have to change their ban on the UK is going to have to change their ban on the North Sea before long. But in any case, and then I have a very large allocation to equities around the world. And the simplest way to do that is just to own the S&P. But you could buy one of those, I can't remember what it's called, MSFT or something, but just a global equities fund. But you've got to own equities. I don't have a large allocation to bonds and that kind of thing because I don't understand them. But we've got a little bit in there as well. But that gives you a rough idea of where I see things going.
MSCI. MSFT is Microsoft.
Oh, yeah, sorry. MSCI, no. Thank you.
Fantastic. No, Dominic, really, really appreciate your time. I know you're busy working towards a deadline for a publication of a new book.
Yeah.
Can you share the title?
Yeah, it's called The Secret History of Gold. It's published by Penguin and it comes out late August.
Oh, okay. By Penguin as well. So that's going to be a big hit at the train stations.
I hope so.
Fantastic. I'll definitely grab a copy when it comes out. Really looking forward to that, Dominic. In the meantime, where can we send our viewers?
Please go to theflyingfrisby.com. That's my Substack. That's my newsletter. And there's a free version that you can sign up to. And if you want to go for the paid option, you can. Maybe sign up for the free version. Then if you like it, you can upgrade.
What's the conversion rate? Just kidding. Just kidding. Dominic, really appreciate your time.
Average. If I do offers, then it suddenly spikes.
Yeah. No, I was like, Dominic, I love chatting with you. I got to be careful to, stay focused sometimes as well. Because when we talked to Stellar Gold, there was a layup in there for something really incorrect to say. We talked about, the bedtime story with Stellar Gold. Like, you provided an easy setup for an inappropriate joke there.
Oh, I see. Sorry.
Yeah. And why the stock wouldn't go up,
Oh, I see. Okay.
That was too easy of a layup. I had to bite my lip here. But Dominic, really appreciate your time. Really enjoy our conversation as always. Stay on for a second. I got to say thank you to our listeners for tuning in. I hope you enjoyed this conversation with Dominic Frisby. Go check out theflyingfrisby.com. Great Substack, really entertaining content. Not just the boring usual like gold blah blah blah. It's really entertaining. Mining stocks, junior mining stocks, or exploration stocks being covered as well. So go check that out. If you haven't done so, hit that like and subscribe button for our channel. It's free. It doesn't cost you a thing. You won't see it on a credit card statement. It is free. So thank you so much for tuning in. We'll be back with lots more on SOAR Financially. Thank you.